Okay, folks, here is our QQQ chart, which is our NASDAQ chart for today. This is how the market's finished. As you see, NASDAQ wasn't up too much for today. We kind of figured that last week. That's why we didn't want to risk any of our money, any of our 401k money in the stock market today. We knew the stock market was going to be pretty flat. When we think the markets are going to be flat like that, we don't really take a lot of gambles. Our investment strategy is very conservative. So we look for opportunities where we can make bigger gains. That's the only time it's worth risking our money for that. The top part is the graph for QQQ or NASDAQ. You see it was slightly up today. What we're really paying attention to is the RSI, the relative strength index. Normally when it gets closer to 90, it doesn't stay above 90 too long and it starts coming down. So this week in the markets, we expect them to finish the week kind of flat. If they finish the week flat, it's a good chance that the markets could be down next week. Maybe 1 or 2%. So again, we don't want to risk our money if we think the markets are going to be flat or if we think they're going to go down. So we'll probably stay conservative the rest of the week. Right now we're in 100% Putnam stable value. So it's not worth us moving it at this point until we see something different. You can see from our investment mix that we are in 100% Putnam stable value. More than likely we'll be there the rest of this week. We don't expect the markets to do much as far as gaining. Okay, so last week we took a small loss. I think it was 0.75%. Nothing big to worry about. Our style is pretty conservative. Over the long run, we won't even remember that 0.75 by the time the end of the year comes. So we're currently at 11.34%. Let's see how we're doing compared to Harbor Capital. Harbor Capital is what we're trying to beat out this year. We try to beat out Harbor Capital every year. We've beaten it out 2 out of the last 3 years and 3 out of the last 5 years using our style. So we know that our strategy works. Harbor Capital is very hard to beat long term. Long term, Harbor Capital is beating the S&P 500. That's why we chase Harbor Capital instead of the S&P 500. Okay, as you see, S&P 500 year to date is 16.59%. We normally lag the S&P 500 at least until the middle of the year because our strategy is very, very conservative. So that 5-point difference, we're not worried about that. All it's going to take is the market to correct 2 or 3% a couple of times in the year, and we'll be passing up the S&P 500. We don't worry about that. Harbor Capital is what we chase. Year-to-date returns is 19.8. It was a little bit higher last week, so it lost a little bit last week too. I expect Harbor Capital to finish the year at a 45% return for the year. So it's probably going to double up in the next 8 months. So we got plenty of chance to catch up with it. But more importantly, we're going to stay conservative because that's what's been working for us. Stay conservative, chase down Harbor Capital each year. If you look at our 1-year return, our 1-year return is beating Harbor Capital's 1-year return. Our 3-year return is close to Harbor Capital's 3-year return. Our 5-year return is very close to Harbor Capital's 5-year return. You'll see Harbor Capital, 11.64, 18.53, 14%. And let's check ours out. Okay, you see our return. Our 1-year return is 17.22. 3-year return is 15.80. 5-year return is 11.93. We should get very close to Harbor this year. If not, we're still going to have a really good year, a really great return. Long term, the next 3 to 5 years, we're going to beat out Harbor. The next 5 out of 7 years, we're going to beat out Harbor based off of our style that we have and what we are disciplined to do and what we've been doing for many, many years. So we chased down Harbor. We're going to beat it more than likely 3 out of the next 5 years, 5 out of the next 7 years. The strategy works. You clearly see that Harbor Capital is beating out S&P 500. So we never chase down S&P 500. We chase down Harbor, and we are going to beat it. Like, share, comment, subscribe. Later.